and we are very excited that you're here. We are, of course, covering a topic related to Schedule C as part of our virtual tax school that we've been hosting this year to train tax professionals all across the country. So I'd like to introduce our speaker for today, Anthony Sampson, enroll agent and speaker for Wolters Kluwer Tax and Accounting. Anthony, you've been doing a lot of these presentations over the past couple of years, not only on maximizing Schedule C deductions, we've done maximizing tax credits for individual 1040 tax returns, introduction to business tax returns, 1065, 1120S. So I'm gonna let you introduce yourself. I know you have a lot of experience over the past 10 plus years on both sides of the industry. So looking forward to hearing about some of the things that you've done in the past 10 years.
Oh, no, thank you so much, Luis, for having me. So, solution architect is just a fancy title for someone who really works with our tax offices across the country and just helping them determine which products be a best fit, how to implement those products, such as TaxWise, such as our client portal, our e-signature, and things of that nature. So I get the opportunity, the wonderful opportunity of speaking with various different tax offices across the country and helping them determine what product be a best fit for them. I'm also practicing enroll agent. I've got a little over 10 years of tax and accounting experience. So I'm very glad that you're here today. We've got a lot of good content to share with you. We're going to talk about the self-employed taxpayers and reporting their income on the Schedule C. We're going to recognize how to maximize those deductions when it comes to using a client using a vehicle, and it also comes to the home office usage of their business. We're going to discuss the pros and cons of deducting expenses associated with that vehicle. So that may be anywhere from taking the standard mileage approach or using the actual expense method. That's something that always comes up, and sometimes clients can be a little bit sloppy in that process. So I'm going to walk you through some steps on how to help them reconstruct that information. Now we're going to use some practical examples from our Wolters Kluwer product, TaxWise Online, and we're going to show you from those things. And also stay tuned towards the end. We got a sneak peek that we want to make sure that we give you in regards to some tax credits. Not necessarily a sneak peek, we're not providing the tax credits, but want to make sure we show you another way to apply some tax credits to your client's refund if they are a self-employed taxpayer reporting their income and deductions on a Schedule C. And we're going to touch a little bit on the QBI on Form 8995, just a little bit, just to show you how it's going to work within TaxWise, and also show you what you could expect to see on the tax form. So a lot of good information that we have in store for you today. But first, let's start off with the presentation of going into TaxWise Online. I'm going to go ahead and bring up TaxWise Online here up on my screen. And looking directly right over here, you should be able to see my screen. Let me just move this little thing over here for the GoToWebinar. Wonderful, perfect. All right, you should be able to see on my screen directly over here what's called the main information sheet. So we're working today on Miss Schedule C. Miss Schedule C, she's a young lady. She's self-employed. She lives over here in Kennesaw, Georgia. And I'm going to migrate over to the actual Schedule C return at Schedule C form, as you can see on the left-hand side. And Miss Schedule C happens to be a carpenter. She's on HGTV, flipping houses. I'm just kidding. But she happens to be an actual carpenter. And I'm going to just kind of show you a couple things here that we've got going on from Miss Schedule C. So I just, for purposes of our example, I just put that our income is $25,000, right? So I'm going to take it out for just 1 second and just show you. Right now we've got nothing in here. So look, when I put this $25,000 in there, oops, not that amount. I'm going to put this $25,000 in there, and it automatically shoots up and it's telling us, okay, she has a balance due of $3,588 on the federal side. Miss Schedule C happens to live in the metro Atlanta area, so she has a Georgia return, so she owes about $706 to the state of Georgia. So she's got a lot going on inside this return. Now, Miss Schedule C, she uses her F-150. She's got a nice F-150 truck that she uses for business. I'm going to walk you through some practical applications on how typically, especially when it comes to working with contractors, self-employed people, at times they do not keep good records. I'm just curious. I wish I was in person with you. I'll ask you, how many of your self-employed taxpayers keep good records, right? Good records that you can do that return fairly accurately, right? Sometimes you're working with that client, coaching that client. Now, there's two approaches we can take to working with this, to taking this approach. There's definitely two approaches we can take. The first approach I'll definitely say would be, let me come over here to my slide over here, would have to be the actual expense versus the mileage. So we're going to go with that. So we're going to start off with actual expense. We're going to start off talking about depreciation, and then we're going to go into TaxWise Online and walk you through this approach. Let's bring this back up on the screen. So we're going to talk about the actual expense approach. So I'm going to click directly right over here. And there happens to be something over here called a business vehicle worksheet. And in addition to business vehicle worksheet, this is where we can put the actual expenses, such as like the gasoline, things of nature, oil, and so forth like that. So let's go back over here to our and identify. We've got the truck over here. Now, Miss Schedule C, she didn't really keep a good accurate amount of mileage, right? She didn't keep good accurate miles. So if typically, and I'm just curious, at face value, when a client does give the information, you kind of just say you're kind of estimating, right? Circular 230 does allow you to take estimates, getting an idea of what the client used for business miles, usage, and things of that nature. So if you were to come in there and said, okay, let's say that you know drove about 13,500 miles, but really you've got her actual expenses. And let's say this F-150 is used 100% for business. She's a contractor, plus she also has a personal vehicle that she uses on the weekends and things of that nature for personal time. But let's say that so far you went through Miss Schedule C's expenses and everything totaled up to be about $2,500 in gasoline. That's what you have for gas, for getting oil changes and things of that nature. Some maintenance and repairs on the truck. So let's say we got about $1,200 on the truck for oil changes and other repairs that you've got done. In addition to that, she had to get some tires placed in the vehicle. So I'm going to go ahead and put that, some tires and some other repairs. So I'm going to go ahead and put 800 over there for those items. And I'm just kind of estimating. Let's say she's got some good insurance credit and doesn't have to pay much in vehicle insurance. I'm going to go ahead and put $700 over there for that insurance. So we're kind of putting through these expenses, and this is typically expensive. Some of you, I'm sure some of you tax offices over here, we got over 100 different tax offices on this webinar today. I'm sure many of you are probably doing bookkeeping services for your clients, right? Bookkeeping, accounting services. So you're probably doing the P&L, doing the journal entries or things of that nature. So you're probably going through their expenses and you're getting these numbers directly from there, because Miss Schedule C, she's not that organized with things. That's why she hired you to kind of keep her items together. She has a loan on the truck, right? So she has a truck interest on that. So she's paying about $100 a month, or a little over $100 a month in interest. So she's spending approximately about $6,700 a year just to operate her F-150. That's typically what's happening. Now we're in a good position here because Miss Schedule C's truck happens to be over 6,000 pounds. And there's some tools that some of our tax offices use that utilize TaxWise. There's something called Answer Connect, where it allows you to search items like this over here. So you can type in things and search for items that you may be looking for. And one of the things over here, like I typed in 6,000 pounds, and we're trying to see about a 6,000 pound truck. So pound truck. And when you start typing in that information, there's an article over here about over 6,000 pounds. And it explains when there's vehicles that are over 6,000 pounds. So we've got information on our Answer Connect. And this is what our taxpayers use, our customers use here to really stay connected to changes in tax law and things of that nature, and how to apply if they're searching for things. A lot of professional tax preparers don't necessarily use Google, do their tax research. So based off this scenario, you're seeing right over here that there's some special items that can be used. Like there's like a $25,000 deduction that can be used for trucks and things of nature, right? And one of the tables we have here, we have a list of all the vehicles that are over 6,000 pounds where you can take this up to $25,000 deduction. And it's based off the purchase price of the vehicle. So I could look over here and I get over the Ford, and I can see, look, right over here, we've got it listed that a Ford F-150, based off this criteria from 2002 to 2021, it's over 6,000 pounds. It's in excess of 6,000 pounds. So what does that mean? That means that we've got some special depreciation that we can apply. And notice I'm using this tool, Answer Connect, to really keep up with what's changing in the world of taxation. So we've got our actual expenses over here. So I'm going to come back over to our Schedule C. And when I click over here on our Schedule C, let's go ahead and apply that depreciation deduction, right? So I'm going to come over here to line number 13. And on line 13, you'll see there's a little gray arrow over there. And it's going to link me over to that worksheet over there to actually apply the depreciation deduction. So I'm going to click right over there on depreciation. And here it is. So this is for her, Miss Schedule C, being a carpenter. Like I said, she flips houses on HGTV. All right, I'm going to come over here and let's actually go ahead and enter this asset in. So I'm going to look on this worksheet over here to put the description of the asset. Here's the asset worksheet, and we're going to enter this information in. All right, so she's driving that F-150, and what we're going to go ahead and do is talk about the asset type. So I'm going to put this in as auto. I'm going to put that information over there, and then the date, place, and service. Let's just say it was 02/15. So maybe she got a PPP loan and bought it with her PPP loan. All right, no, she didn't do that. Just kidding. 2020. I'm going to put that in there, right? So we've got the date that the truck was placed in service. Now let's put the purchase price of the actual vehicle. So let's say that she paid approximately, let's say she paid about 22,000 for that truck, right? So she paid 22,000 for that truck. You see how TaxWise is calculating the depreciation right here, right? So TaxWise automatically calculated the depreciation over here, 4,400. Now, if there's some special allowances that are involved, we can say yes. Take special depreciation allowances. We can definitely say yes and put that and take that into consideration. Those special allowances that are involved. So you can see how we can expense out that 22,000. So I want to make sure I bring to your attention that you can use a special depreciation allowance. Make sure you get a good understanding of this if that vehicle is over 6,000 pounds, right? Over 6,000 pounds. So this is a good tool that you want to use from our Answer Connect website to get a listing of all the vehicles that are in excess of 6,000 pounds, Jeeps, trucks. You can see it. It's all listed over here, even kind of SUVs, things of that nature. So you can see that, all right? So if that vehicle is over 6,000 pounds, you can see right over here, we're getting up to that $25,000 deduction. So if I come back over to my Schedule C, let's look at the Schedule C over here under the carpenter. You'll see in this case scenario where we've got, here's a $22,000 deduction, and you've got the car and truck expense of $6,700. So because it's going to create a negative amount on the tax return, so negative $3,700 is what's carrying over. You got that negative $3,700, right, as far as a loss in the return. So you're in a position now where you're literally seeing how that understanding these rules of depreciation can help you, right? You're in a position now where you can understand this. So you want to make sure you know what vehicle's over 6,000 pounds. Now, let's say that this vehicle wasn't over 6,000 pounds, right? Let's say that Miss Schedule C was doing another type of business, and let's say it wasn't over 6,000 pounds. So let's go back to her asset worksheet, and I'm going to turn off. Let's go ahead and turn off the actual special depreciation allowance. So if we turn off the special depreciation allowance, she's just getting a current deduction of $4,400. Now, do you see, I hope you're seeing how this number is changing. I got a refund monitor over here on the left-hand side, so I can see what the client's getting for the refund. You can see it's there's some live calculations going on. TaxWise is also telling me what next year's depreciation is going to be. It's going to be $7,040, right? So we've got these tools, these workflow tools that are helping us to service that client. Now, if you find yourself in this position, right? Because what's our goal? Clients look at us as an investment. They say, okay, I'm going to pay you $400. How much money are you going to give me back, right? They look at this as an investment, like we're the lottery. We're not the lottery, okay? You're not gambling with us. But clients look at us like that, right? They come to your tax office, I'm going to pay you $400. How much refund am I getting back? So if you find yourself in this position where the vehicle is not over 6,000 pounds, it's under 6,000 pounds, I've got a balance due. I'm going to come over here and look on the Schedule C. Let's come over here and look at the Schedule C. And I'm going to come back over here and I'm looking at this and we're saying, okay, all we've got is $6,700. So I'm going to add that up, $6,700 plus the $4,400. So about $11,100, right? I hope I added it up right. Right, $11,100. So that's really all we're getting, but the client owes some money. So what do we do when we're in this scenario? What's the best approach we should take? Well, TaxWise allows us to actually, TaxWise has some live calcs when it comes to taking the mileage approach. In addition to using TaxWise, I want to encourage you to sit down with your clients and utilize an actual mileage log. You're probably saying, what? I'm not going to sit there and spend all that time creating a mileage log. If you got to add a little bit extra money to return to the prep fee, you can. And I hear some of you saying, well, my client's not going to pay for that. I get it. But try to sit down with your client and get an understanding of how many jobs, how many tasks they were performing, what locations they went to, things of that nature, because you can help the client reconstruct their mileage logs, right? There's nothing illegal about it. You know, if the client said, okay, in November, I worked 14 jobs in November, I drove from point A to point B, it was X amount of miles, etc. You can help the client reconstruct it. This is where you're creating value for the customer. You're creating that stickiness. You're helping that retention factor because they're seeing not only are you preparing their taxes, but you're also educating them and going a little bit above and beyond. So if you took that approach and went above and beyond and worked through this mileage and get a good understanding of this, let's go back to this scenario that we have over here listed. So I'm going to go back over to our vehicle worksheet. And looking at our vehicle worksheet, we really used an estimate. We really didn't sit down with the client and get a good understanding of how many miles they actually drove. But once we go through that, we're gonna say, okay, really, when we went through this, you actually drove 18,673 miles. That's really how many miles the client drove. All right, so we went through that portion. Now there's one other page over here. I'm gonna go over to the second page of that Schedule C. Let me go over to my second page of my Schedule C where that information is at. And right over here is that 18,670 because the worksheet that I was looking at before, that's the worksheet to determine how much of business usage versus personal usage. Now right over here is where we put the mileage 18,670. You can see that we have the mileage locked in there, 57.5 cents a mile. We've got that directly locked in there. We can see that. And then look what comes up. Yes, was this vehicle available for personal use off duty hours? Nope. Do you have another vehicle available for personal use? Yes, we do. Do you have evidence to support your deduction? Yes, we have evidence. Why? Because we work with our client to reconstruct the evidence. All right. So fantastic. So now you're seeing over here. So we've got this information entered in over here. I'm gonna come back and I'm gonna take out the I'm gonna come back over here and we've got the Schedule C listed over here. And coming back over here on the Schedule C, you see we've got the car and truck expenses, $6,700, right? We've got those items over here. But what I'm gonna do is, oops, one thing I should have went to the second page. You'll see on the second page, let me just bring that up right over there. With the mileage approach, right? 18,670, you'll see that with the mileage approach, what this number will come up to. So I'm gonna take out the depreciation. Let's go ahead and take out the depreciation. I'm gonna go ahead and click right over here and take out the 4562. Yes, I want to remove the 4562. So when I remove that 4562, I'm coming back over here under my Schedule C. You see right over here, I've got the vehicle expense deduction. Oops, there's one more thing that I need to do because what I want to do is I want to actually reduce the amount. Come back over to my vehicle worksheet, 100% used for business. I've got those deductions listed over there. Wonderful. We've got those items listed directly over there. Percentage of vehicle use, 18,673 miles. And then we'll come back down over here on the actual Schedule C, page 2, and there's that 18,673. Calculate business miles, check the box. And then you see right over there, perfect. So I just had to check my box. Exactly. Now you see the deduction now is $10,735. This is what you do when the client's vehicle is under 6,000 pounds. So that's when you don't have that special allowance deduction, right? You don't have access to that $25,000 deduction that you can take. Work with the client to get the depreciation deduction because look what happens. With just this amount, all I've got is $2,627 the balance due. But once I check this box over here, now the only amount due is $531. Do you understand what I'm saying? Only $531. And now look on the Schedule C. You'll see it listed right over here. That amount, $17,435, is the total deduction that we're taking. Okay, so I definitely want to encourage you to work with your clients because definitely when you take that mileage approach, it's very helpful. It can help you take that extra time. If the client's vehicle is under 6,000 pounds, go ahead and help them reconstruct the mileage log. That's going to help the client, right? So let's come back. So we talked about the actual expense approach and we talked about the mileage approach. Those are some things that we actually talked about. And now I want to just bring some attention to you now. If you take the mileage approach, and I should have had this as a polling question, if you take the mileage approach, is depreciation included in the mileage approach, right? Just curious, is that? And that's a really good question. Not everyone knows that depreciation is included in the mileage approach. So for 2020 tax season, filing season, you actually did have the 27 cents per mile was included in the actual 27 cents per mile was included in the depreciation approach. So this is something that I got from our CCH CPE link, and definitely Wolters Kluwer is a great provider of continuing professional education CPE. Reach out to some of our sales consultants, or for those of you that are existing Wolters Kluwer customers, we have content applicable to the actual explanation of this that you can watch and get understanding. So when they sell that vehicle, there's a possibility it could be a recapture of depreciation. So we want to make sure we bring that to your attention. And for 2021, you had 26 cents per mile that was being treated as a depreciation deduction for 2021, 26 cents per mile. All right, so let's check our engagement. Let's see how everyone's engaged in the session here. So just curious, we're gonna launch a polling question, Luis. Let's go ahead and launch a polling question. Just curious, what is used more often in your tax practice when calculating the home office deduction? So we're going to switch gears for a moment. We're going to talk about the actual home office deduction. So what is used more often in your tax practice when calculating the home office deduction? Simplified method or the actual expense method? Just curious.
Right now we have, Anthony, 48% for simplified method,
Okay.
48% for actual expenses, and 4% for not applicable. So it's almost split half and half between the two. What is the right answer?
Well, before I give you the right answer, let me address this question. So for Lassandra's asking, will this session be recorded? Laswanda's asking, will this session be recorded? Absolutely, Laswanda, yes. The session is going to be recorded. You can review at a later time. Another item to a question coming up from Bob. Bob's asking, no, sorry, from Erica. Erica's asking, is there a limitation on the deduction? Absolutely, Erica. That's why we want to encourage you to use some of the workflow tools that we have here at Wolters Kluwer, because you'll see that we explain the limitation of the deductions. If a vehicle is under 6,000 pounds, if a vehicle is under 6,000 pounds, you'll be able to know what the limitation depreciation is, and you're subject to some depreciation limitations. I believe it's Section 280F or something like that of the Internal Revenue Code. So you'll definitely get some information about that. And if the vehicle's over 6,000 pounds, you get to take advantage of some special depreciation deductions immediately in the first year's placed in service up to $25,000. So that's a good question. And TaxWise does calculate those items for you. And Bob's asking, can we use actual expense in Schedule E rental real estate? That's a really good question. When the person's using their vehicle to travel to look at their rental properties, I encourage you to use the mileage approach, because you don't necessarily want to use the actual expense when you're driving around, and especially it depends on where those rental properties are located. You want to go ahead and use a mileage approach, because I used to have a college professor. He had a rental property that was on his way home from the college. So after he would finish teaching, on his way home, he would drive to the property, look at it, walk around, or just do something on the property, and then drive home. So he was deducting all his mileage going to the property on a consistent basis. But to answer Luis's question, there really is no right answer. This is just one for engagement, to see who's taking the actual expense approach or the simplified method approach. But I see we've got 48% of people that's a standard practice in their practice that use simplified method or the actual expense method. So what we're going to uncover and address in this session is, when is the best time to take which approach, right? When do we know what we should do? For this particular client, should we take the simplified method or should we take the actual expense method? That's really what we want to address in this session. But one thing too, while I've got everyone's attention here, I appreciate everyone joining. I want to take a moment just to bring reference to what the product that we're using here. We're using a virtual tax office right now. And the Wolters Kluwer Virtual Tax Office works within TaxWise Online. It's a browser-based solution. As you notice, right? This product is browser-based, so I don't have anything installed on my computer, just Google Chrome. Really, I could be doing this presentation on an iPad right now. You won't even know this, or I can be doing it on a Chromebook, and you won't even know this. So that's really what it is. We've got diagnostics in the product, so you can definitely look at diagnostics in the return. If you've got errors in the return, we definitely have these red underlines in here. I'm going to talk about something called the main information worksheet. So one of the key reasons why why many tax offices use TaxWise, I'll tell you why. If you look in this, as I'm deleting this information, and someone put in the chat box, somebody put their zip code in the chat box. Somebody take a moment and put their zip code in the chat box. You'll see in TaxWise, you see these little red exclamation points. These red exclamation points indicate that there's missing information. Thank you, Lisa Wanda. I appreciate it. I got a lot of zip codes. You see those red exclamation points over there? It's tied to these red underlines. So when someone comes in TaxWise Online and they enter their information, like let's say I just finished entering my name. My name is Schedule C, and I hit tab, tab, tab. You notice it's just moving to the next line. But TaxWise allows our customers to finish basic returns in 10 minutes, in 10 to 15 minutes or less, depending if they got all the information from the customer. So I can hit Control E on my keyboard. I can type 123 Main Street, and then I can type that I live at 75119, and I can type, what is that, in Texas, right? I thought I was going to be, let's say, Las Colinas, Texas, right? Or I can type that I live in 19808, and I can type that I'm over there in Pennsylvania, right? Or Delaware, I'd say Wilmington, Delaware. So we have that zip code database, and then I can hit Control E on my keyboard, and it just jumps me to the next red field. So this is great for new preparers, people that you're training on how to use a tax software. You've got these red underlines. And when clients send you documents, those documents can be stored right here in the online vault. So whatever tax documents the clients send you, like the W-2s, 1099s, things of that nature, you can store those tax documents here in the vault. Even their driver's license, like I'll go ahead and grab a particular document and we can store that directly here, like the sample driver's license, W-2. I can take that, put that in here, store that in here. And then we also have a mobile site. So when clients send you their documents, the documents come right here into the vault, into the mobile site, into the vault right over here. So a lot of tools that we have that are available for you to utilize in your tax practice. We do have OCR recognition. So if I hit scan document, it will begin to read the tax document and load the W-2 in here. So anyway, so let's get back to our presentation, working through this browser-based solution. I appreciate everyone's being part of it. So let's talk about the simplified method versus the actual expense method for the home office deduction, because our goal is to really, what is our goal? Our goal is to have our client legally, L-E-G-A-L-L-Y, legally pay the least amount of taxes, right? That's what our goal is. So how are we going to exercise that? How are we going to get the client to be able to do that? So we're going to use these tools that we have in here. We're going to know the tax code. We're going to know how to prepare taxes. And we don't know the best way, we're going to use tools like this Answer Connect to help us to understand things that we don't understand. So one perfect example is we're going to talk about the home office deduction. So coming back over here to Miss Schedule C, I'm going to take off some, I'm going to raise the income up. So let's say, okay, instead of her doing 25,000, let's say she did 45,000. Oops, I got a calculated fail. Let me move up right here. Let's say she did 45,000. All right, so let's say she had 45,000 in sales, right, for that particular year. So Miss Schedule C has a net profit in her business of $27,565. That's her net profit over here. Let's wonder the vault is located right over here. To answer your question, I want to let you know the vault is located right over here. All right, perfect. So let's come back to Miss Schedule C. So she has $27,565 in net profit. So how are we going to reduce this when we take the home office deduction? Could we just take the simplified method, right? Could we just say, you know what, let's go ahead and do the simplified method. Let's kind of get this over with over here, and let's take the simplified approach. So simplified method literally is we have the total square footage of your home. So let's say the total square footage of her home is 2,000 square feet. Right? And the way how the simplified method approach works is for every square foot, it's $5. So if I enter 1 square foot used for business, there's the $5. So that was live calcs and TaxWise, right? You got the $5. So when we had 48% of people, so we have over 100 people in this webinar. We got over 100 plus people in this webinar today. And over about 48% of you said that you use a simplified approach. So when you use a simplified approach, this is what you're doing. You're applying a $5 deduction for every square footage of the home. So let's go back to the scenario over here. So let's say Miss Schedule C, let's say her home is 4,000 square feet. It still doesn't matter, right? Because she's using that one amount. So it doesn't matter how large the home is, it's still $5 per square foot of the home that's being used, okay? So I'm gonna go ahead and change, so let's say she's using 100 square feet. What is that gonna show us? It's gonna show us $500 deduction, right? So we put a $500 deduction on the return. Fantastic, right? But then let's say, for instance, that she's using 1,800 square feet. All right, well, wait a second, the math is not adding up. 1,800 square feet, but only a $1,500 deduction. What's going on over here? Well, it's capped, it's limited, and I should have had it up on Answer Connect, but it's actually limiting the amount of the square footage, just limiting the amount of deduction you can take. So if I change this back to 1,500, the most you can deduct is $1,500 of the home that's being used for business. That's the most that you can do. So really a best case scenario is, especially simplified approach is definitely if someone is just going ahead and is not giving you all their expenses, they're not giving you all their bills, all the money they've spent. That's a perfect time that you would use the simplified approach. It's very simple, very straightforward, right? Now let's talk about when we should use the actual expense approach. So, you know, we're coming out of a pandemic, right? That was a word that never used to be in our vocabulary. So let's say Miss Schedule C, let's say she had a bad year, right? So we're going to take out the $45,000 and we're going to change this. Let's say she only did 15,000 in sales, 15,000, right? Oops, I put too much, 155,000. Let's say she only had 15,000. She had a rough year. She had a bad year, right? So if she had a bad year, what happened to our deduction? She still used 1,500 square feet of her home for her business, right? Maybe she had her tools, her equipment, she had all those things that was there she was using for her business. What happened to it? Well, I tell you what happened. You cannot take a home office deduction if the business has a loss. And what's great about a product like TaxWise, TaxWise is helping you to not get audited by the IRS, helping you in that position because TaxWise is not going to force an inappropriate number in this field. If the business has a loss, it takes away that deduction. So this is a scenario where we should use the Form 8829 because what's going to happen is the simplified approach doesn't roll forward. There's no rollover. But let's say, okay, Miss Schedule C had a bad year in 2020, but 2021, she's got it rolling. She's got it going on. So what do we want to do? We want to go ahead and bring in the Form 8829. So if a client, a business had a loss, do not just sit here and leave these numbers here in the simplified approach. I'm going to go ahead and hit this plus sign, and I'm going to add in an 8829 expense for business use of the home. And when I add in that 8829, I'm going to click this amount, yeah, for this Schedule C. And let's bring this in over here. So we're going to go back to our scenario that she's using 1,500 square feet. Let's use for the business, right? She's using her garage, her entire garage. She has other parts of her home that's being used with tools and equipment and things of that nature. And total square footage of the home is 4,000 square feet. So that means that, look what this means. 1,500 square feet of the home is being used for business. 4,000 square feet is the home. So that means that 37% of her home is a business expense. Okay. So we're already above, we're already ahead. These are the types of deductions that you want to take. This is what we're talking about, maximizing deductions for that particular client. So we're already way ahead. So we already got, so that means that her utility bill. So this is where we're talking about going the extra mile and getting that information from the client. That means that her utility bill. So we have a little worksheet in TaxWise that we can use. I can toggle over here and link to another form, and I can put a scratch pad in here. So you're gonna sit down at Miss Schedule C, and this is, and I never forget this time where I had this one client. I never forget this. I always tell this story when I do this exercise on this webinar. I never forget I had this one client, and this client, she had an in-home daycare. This was years ago. This is when I first was doing taxes back in what, 2011 or something like that, 2012 or something like that. It was early, my first or second year. And I think it was my second year. And I started getting comfortable with doing it. And I knew that, okay, she didn't have that much expenses, right? She was doing in-home daycare. She kept maybe about 4 or 5 kids and doing in-home daycare. And she was a single mom, and she didn't have that much expenses. So we had pretty much took her deductions, went through it. I think whatever I did, simplified approach, maybe I took that. And then I was done. I said, okay, your refund is 5,400 and XY dollars. She's getting a pretty good refund. And when we got done, she was like, she didn't feel like I did a good job because I didn't go through and I asked her, well, how much was your utility bill? Okay, you spent $250 a month of utility, so on average you spend about $3,000 a year in utility. Okay, how much is your these other deductions that you have? I didn't go through and ask, how much is your security? Do you have a security alarm? Okay, you have a security alarm. How much you pay that? $25 a month. Okay, so you spend $300 a year in security alarm. She would like it. She would have liked it if I had went through and asked her all these questions. And when we got done, she said, I don't feel like you did a thorough job. I think the last person did my taxes last year, they asked me all these questions, and you didn't ask me all these questions. And hey, that's her perception, that's her belief. But from that point on, I learned that even if I know you don't have these deductions, I still ask so they feel like they're getting a certain level of service. Okay. So that's one thing I want to encourage you to you. Remember, tax time is the only time during the year that a lot of people sit down and actually look at their finances. with a professional. They sit down with you. They're not sitting down in November thinking about their finances. They're making Christmas lists and going Christmas shopping, right? They're not, doing that, right? So they're only sitting down with you, really looking at their money. So you ask them questions, you give them attention that they don't get all throughout the year. So that's a little tidbit I want to give you about client interaction. But right over here, you'll see utilities of $3,300. So we've got the utilities. Let's say, so one thing I want to make sure I share over here. Let's say Miss Schedule C she's a single taxpayer, right? She's single and she's taking a standard deduction, but she does have a mortgage, right? So this goes out to those who take the standard deduction but are taking home office deduction for self-employed person. You can put the mortgage interest, deductible mortgage interest, right over here. Just want to make sure I bring that to your attention. Another thing I want to bring to your attention is this direct and indirect side. Okay, I never forget when I first started doing taxes, people started saying, no, don't take the home office deduction. I don't want the deduction. Don't take it. Don't take it. Don't take it. Because they used to be scared because they think they get audited. And I was like, why are you scared about getting audited? I honestly believe that people were putting deductions here on the direct side when they belong on the indirect side. So perfect example of the indirect side is like this mortgage, right? The home, we already said, okay, 37% of the home is being used for business. So it's not the entire home, 1,500 square feet. So indirectly, there's a mortgage interest on this. So let's say her mortgage interest is $5,000 a year is what she spent on mortgage interest, right? When would you use the direct side? You would use the direct side. I never forget, I had a friend of mine. He worked from home. He was like some kind of consultant, and he paid a couple contractors to build like a little attachment to his home. And that portion he built as an attachment to his home, that was where he worked out and stuff like that. He created like a nice little studio and things of that nature in there. So that would be a direct expense. I remember I tell this story a couple of years ago. I painted my office here in the basement. If I'm a self-employed taxpayer and I'm painting my office, I went and bought the paint for the office and everything like that. That would be direct expense. If I went to Home Depot and I bought some paint and I bought some carpet and I bought some things in here and I spent $250 to redecorate my office, well, that $250, that's a direct expense. But the indirect side, I'm going to talk about this. Now, when we talk about repairs and maintenance, if your client has a home, repairs and maintenance, this is, getting the pipes worked, getting the toilets changed. This is getting the grass, the leaves taken care of, right? So these are indirect expenses. So you want to use a scratch pad in TaxWise and say lawn care is, $600 a month. Repairs to home. We got a new toilet, we got a new front door, we got all these things. So we spent maybe about $1,500 on that. So you want to go through the client, interview them, get these deductions, and you're probably saying, okay, why am I doing this? What is this going to benefit me? The client has a loss, right? What's the benefit of doing all this on the 8829? What is the benefit? Well, let's look at it. The client has a loss. There's no home office deduction being taken. Right now, TaxWise is telling us that $1,875 is the allowable expense. You know what's going to happen next year? This is going to carry over to next year. That's correct. This $1,800, this $1,875 is going to carry over to next year. So when Miss Schedule C has a better year, a more profitable year, this will reduce the amount of taxes she pays next year. I will encourage you. You want to increase your retention rates. Some of you, I remember tax offices were running. The tax office I worked for was running at about a 70%, a little over 70% retention rate. That means 7 out of 10 clients came back each year. So this is something that you can do to help them. Explain to your clients what the carryovers are for. Explain that to them. Clearly explain that to your clients. You want to make sure that you take the time to explain it to your clients. So that's going to help them to come back next year. Right, so exactly. So Daryl, I see your message. Don't forget that even though home office cannot be used to increase losses, amounts that relate to taxes and interest are deductible regardless, while others' costs are limited. Great point, Daryl. I appreciate you pointing that out in the chat. Thank you so much. So we definitely want to make sure that these items that are carrying over, that they're rolling over to next year. You would definitely want to make sure that these items are rolling over to next year. All right, so what's next? So typically what happens, we normally stop. Right? That's typically what happens. We normally stop. And this is what you were saying. Exactly what you're saying. This is the amount of the allowable portion, right? So typically what happens, we normally stop right here. we stop at, okay, I got your home office deduction, I took the expenses, but what about right here, depreciating the home? This is something that I encourage you to sit down with your client to get a good understanding of depreciating the home. So let's go back, before we go into this, let's go ahead and add some income to this return. So we're gonna go back and add some schedules. So we're gonna go back and put her $45,000. So we're gonna go ahead and put that right over there, that $45,000. So let's go back and put her income. So she's going from 15,000. Let's go over to 45,000. All right, so we're going over to $45,000, right? So we're back over to 45,000. She's having about $3,741 was coming in. That home office deduction now is coming into the effect. What's coming? Let me take these numbers off here. All right, so it's going to pull over that home office deduction. Now look at that, $4,150 in home office deduction is flowing into the return. So you see that $4,150 is coming into the return. Let's come over here to back to the 8829. So I want to ask this question too. Or not, I want to encourage you to ask your client this question. When you finish entering these home office deductions, I want you to sit down with your client and say, ask them, okay, how long do you intend to be in this home? Do you plan on selling this home next year? Do you plan on selling it? How long have you been in the home, and how long do you plan to keep this home? Because when you begin to take the depreciation deduction for the home, it does allow you to go, to reduce the client's income. But in the event that the client sells that home, there is a recapture of depreciation, meaning you got to claim that portion back. I'll explain a little bit more detail. So, but you want to get understanding, ask the client, do you intend to be in the home for a long time? You want a longer time. So the business use portion of the home, and this business use portion of the home is what you can actually take as a deduction over here. So it says enter the smaller of your home's adjusted basis or its fair market value. So what is the adjusted basis? Adjusted basis is what they paid for the home plus any capital improvements that they made to the home, right? You can enter that amount, or you can look at the fair market value. And now fair market value, I mean, you can definitely get that information online. You can speak to an appraiser, but you can get that fair market value of what that home is. So let's say that home is worth $250,000. So home is worth $250,000. And we talked about, let's say we talked about over here that 37% of the home is being used for business. So 37.5% of $250,000 is $93,750. So $93,750 is what's being used for that business. Okay, $93,750 is what's being used for the business. So I see some people putting some questions in here about Schedule E's. We're focusing mainly on Schedule C today. We're not focusing on Schedule E. Maybe that's something that we can plan for to create a webinar on later on. But I see your essence. Thank you so much. But we're focusing on Schedule C here today. But let's continue on. So we've got this $93,750. So what do we do next? How do we get this depreciation deduction in here? What are we going to do next? So let's click on this arrow over here, and we've got to put in the depreciation percentage. So it's going to link us over to the worksheet. So depreciation of your home, we're clicking right over there. So what was the date that the business, what was the date that the home started using, what was the date that the business started using the home? So let's say they was placed in service. Let's say that they was a COVID person, right? Maybe they un-COVID when we had big shutdown, 03, 15, 2020. Right, so that's when it was placed being used for home, right? So we had 250,000, that amount over there. So this is the part where I encourage you. You're going to want to use the answer connect solution, because the method of depreciation that's being used, I'm going to put 200 declining balance. And now remember, now this home is not, this home is being used for a business purposes, right? It's not a residential rental property, so it's not going to be 27.5 years. It's going to be 39 years depreciation. And as I said, this is the part where we definitely got to take into consideration what convention we want to use. You want to look at Answer Connect to find out what convention you want to use, just for purposes of our our presentation. I'm going to put in the mid-month right over here just for right now. And was there any prior depreciation to this property? No. But I want to show you right here. We've got a $4,006 deduction that we added in here, right? We got a $4,006 deduction that we're using right here. So that $4,006 depreciation deduction we're using over here. So think about this. This home, let's kind of add this up. We got $4,006. In addition to that, we've got let me look over here on the 8829. In addition to that, we also have a allowable expense deduction right over there. We got the total allowable expense deduction. So we have pretty much added in almost $7,000 or over $7,000 of deductions that we've added in together. When we add in the business usage of the home, you add in the actual depreciation for the home that we're able to add. And this is literally just from expense that the taxpayer's already paying. They're already paying for this. They're going to pay for their lights. They're going to pay for their mortgage. They're going to pay for these deductions. So this is just another way to add in these deductions. So when you think about it, when you take the mileage approach, you take these actual additional deductions, this is a way that we can maximize the deductions. All right, so let's look back at what Essence saying. So no, not for a Schedule C. What if the client is using a home they're renting? And in there paying a landlord rent for a home they live in for business purpose. Oh, that's a fantastic question. So I apologize, I misread that. So if they're using the home that they're renting, they get an even higher deduction. Because think about it, you can deduct the mortgage. You can't deduct, well, the way you deduct principal is through depreciation, right? The principal in the home. The interest expense on the mortgage is deducted over here. Well, so if they're renting, it's a better bang for the buck. So let's come over here and I'm gonna put in the rent amount. And let's say the rent is $2,000 a month, right? So they're paying $24,000 a year. So put $24,000 right there, $24,000. That increases the deduction even more. All right, so we have that. So that's on the indirect side, and this is, like I said, 37% of the rent, 37.5% of the rent is being deducted. Okay, so we got some significant, but we won't have really much repairs. Well, maybe have lawn care and stuff like that. We won't have much repairs if they're renting, but you'll see these are some items that they'll have over here. So I hope I answered your question, Essence. Definitely, I hope I definitely answered your question. All right. All right, wonderful, wonderful. So let's kind of come back to this over here. So I'm curious, simplified method or actual expense method? Which one do you prefer, right? Simplified method or actual expense method? If you prefer actual, type actual in the actual chat over there. If you like the actual expense, type put actual in the chat. Right, is rent a direct or indirect? Rent's going to be an indirect because if they're living in the home, rent's going to be an indirect deduction. I see that question over there. All right, so let's launch our next polling question. Okay, Tiffany said she likes the actual. Lasandra says the actual simplified. So good. I see some people putting that in there. But let's go ahead and launch our next polling question. Just curious to see, on average, what do you charge to prepare a tax return with a Schedule C? Do you charge under $200, anywhere between $200 and $299, anywhere between $300 and $499? Do you charge over $500 or not applicable? Maybe you're here for training purposes. So just curious, on average, what do you charge to those types of returns?
Anthony, this is one of those questions where it's interesting for tax professionals to see what others are charging for tax prep. You know, of course, uh, the fees will differ based on your state, based on your city, your community, but overall, it's really interesting to see what others are charging for tax prep. And this is really not something that we are looking to understand, but more so we're hoping to share the results back with everybody so that you can benchmark your Schedule C tax prep fee and perhaps decide to increase it or decrease it to be more competitive.
And this is really good information because for those tax offices that are on this webinar and they're actually just trying to determine, okay, am I marketable? Sometimes you do feel like as a tax pro, as a taxpayer, that you're leaving money on the table, right? So it's just a good gauge to see. In fact, it's amazing. I actually use some of this information to know, was I charging appropriately for my friends, making sure I'm giving them the discount. For one of my friends, he had a couple questions about pricing, and I said, no, this is very well below average. There's a couple dollars here. I'm asking you. So some good content. So we got some good results here. Let's take a look at these results here, because that means that I like the first one up there, because those that are charging under 200, I really want to encourage you, because we got 0.21%. So on average, there's about 30 tax offices, 30 tax professionals on this webinar right now that are charging under 200. I really hope that with the content that you learned here today about the actual expense and the mileage approach and the simplified approach and these additional tools that you can use to help reduce the client's tax liability, I really hope that those that are charging under 200, that you would really be able to see your value and be able to charge more for your service. About 30 tax professionals here representing that are charging that amount. So this is definitely giving some hope to you that you can have a more profitable tax season. So thank you so much, Luis. So let's talk about the qualified business income deduction, and then we're going to talk about my extra bonus content, my bonus content that I want to make sure that I spend a few moments here with you. But Luis made sure that he wanted me to talk about QBI, and I will address the QBI deduction inside of TaxWise Online. So one of the things when you're inside the Schedule C, you'll see right over here. So on our Schedule C form, all the way at the bottom of the Schedule C, I'm going to just scroll down to the bottom underneath the expenses, underneath the net profit. There's a worksheet over here that says qualified business income information, right? And it's asking, is this a specified service, trade, or business? If you want more information about determining what's a specified service, we have a list of specified service, business, or trade businesses listed on our Answer Connect subscription. You can definitely go to our Answer Connect and type in specified service, trade, or business and get that information. Like if I came over here and typed specified service, trade, or business, it'll start coming up. Those items will start coming up over here. But I want to make sure I just bring this to your attention. So it's calculating the QBI deduction, and with calculating QBI deduction, it's taking into consideration, okay, this is what your qualified business income is, which is a percentage of the net profit. It's deducting out self-employment tax, and it's saying, okay, these are the net qualified business income. So this is the amount that's eligible for the qualified business income deduction. This $11,416 is going to roll over, it's going to carry over, I should say, to Form 8995. So we've got a form now for the qualified business income deduction, and this is for simplified computation. If the client's income is higher and higher thresholds, and it's 8995A. But you'll see listed right over here that $11,416. You'll see it carry over, and then about 20%, approximately 20% of the client's qualified business income is eligible for that deduction. So that's $2,283. So this is one of the good things that came out, or I think is a good thing. Maybe I may be wrong. You may disagree with me, but this is something that came out of the Tax Cuts and Jobs Act. I apologize for my opinion here, but this $2,283, it's going to carry over to the front page of the 1040. So you'll look at the front page of the 1040, and you'll see the deduction over here for qualified. I apologize. It used to be on the front page of the 1040. It's on the second page. No, here it is right here. A qualified business income deduction. It would carry over here into this calculated field, and you'll see that qualified business income deduction. It will carry over there. So I just want to make sure that I bring that to your attention, that the items that are on the 8995 would carry over here. Check the box if you're aggregating. No, we're not aggregating any businesses. So perfect example, if the client had multiple businesses that were similar, you can check the box and aggregate those businesses if you wanted to go ahead and put the deduction here. If you want to go ahead and aggregate the businesses to get the QBI deduction. All right, so without any further ado, let me go ahead and share the bonus content that we have here. I'm so excited to announce it. But when you're working with self-employed clients, all right, there's a credit called credit for sick and family leave. It's for self-employed taxpayers. Take the time to go ahead and ask your clients, were they impacted by the coronavirus to the extent that they had the coronavirus and was not able to work? They had the COVID-19, or did they care for a loved one? Maybe their spouse or their children had COVID-19. Now this deduction, this credit is available between April 20th and March 31st, 2021. So it's going to carry over into our 2021 filing season. You can use it within those periods. So that allows for 10 days that the client can get a refundable credit for the actual time that they were not able to work, and they can get credited also for the time that they were caring for a loved one. So I know we just got a few seconds. I'm going to show you the form. I'll never forget one of my friends. Actually, I met him at one of our GetWise seminar, and I call him a friend. He called me when he figured out this form. He called me and said, Anthony, you got to look up form 7202. You got to look this form up. Any of your clients that are self-employed, they've got to take this consideration if they were impacted by the COVID-19 virus. So it's up to 10 days that you can take. So number of days you were unable to perform services as a self-employed individual. And so I'm going to go ahead and put that for 5 days. I was not able to work because impacted by COVID-19. It's going to ask me for what my net profit was for my business. I'm going to come over to my Schedule C. I'm going to click on my Schedule C, the net profit for my business. Oops, I'm on the second page of my Schedule C. The net profit from my business was actually the, what's my net profit? My net profit is $12,284. So since my net profit is $12,284, I'm going to go ahead down to my Form 7202, and I'm going to put that $12,284. And once I put that there, you'll see that TaxWise is calculating. Look at that. It's doing all the calculations and calculating that $235 tax credit can go on my tax return. Now, in addition to that, if I was carrying for a level, and there's so many rules associated with this, but that's why I want to make sure you're looking at our Answer Connect to get a good understanding of this. Same thing, if I'm carrying for a loved one, let's say for 5 days, so the max is 10 days you can put, and I've got my $12,284, and I wasn't able to work for that time period, you'll see right over there that I got 155 days. So I'm at $155. So $155 plus the $235, these two numbers added together, so I should see that 155 plus that actual, let's see right over there, what was that number? 235. That's $390. If I come over to my second page of my 1040 over here, you'll see how TaxWise is bringing that $390 right over here. It's a credit that's coming directly over for those self-employed taxpayers that were impacted by the COVID-19 virus. And I just want to take a moment to just clarify one thing. I definitely don't want to misguide any of our viewers over here. I took the profit from the actual Schedule C, and thanks, appreciate you, Vern. And one thing I should have said, I pulled up the instructions. I should have took the profit right here from the Schedule SE. So in TaxWise Online, you would actually go over to the Schedule SE. I apologize about that, and pull that information about what that net profit is. You'll pull it directly from the Schedule SE and put that amount over there of what that net profit is. So I just wanted to make sure I just bring it to your attention. Pull that information from the Schedule SE and not the actual Schedule C, because it's supposed to be net. It's supposed to be net the self-employment earnings. I wanted to make sure I bring it to your attention. So looking at this directly, we can see that virtual tax office solutions today that we presented to you, they're powered by TaxWise Online, and it allows you to have a tax office anytime, anywhere. And Luis, tell them about how it's browser-based and the cloud-based security, and there's no software installation. Luis, can you tell them a little bit about that?
That's right, Anthony. And thank you for asking the question, because I'm always excited to share the browser-based capabilities with TaxWise Online, because it just really gives you that accessibility anytime and anywhere without any installation or any hardware really requirement. You can access it from your iPad, you can access it from your iPhone, from your Android device. You can access your tax return information from your home computer, from your office computer, from the vacation spot. It is always the same. And if you are using TaxWise Desktop, for example, you can recognize that the TaxWise Desktop solution and the TaxWise Online solution are practically the same. So the interface looks very familiar. So the transition from a desktop solution to online will be very seamless. And as a matter of fact, all of your return information from the previous year, if you're desktop, will flow to online if you were to be interested in making the switch. Similarly with a competitor tax solution. So if you're not using TaxWise right now and you're using a competitor tax software, you can convert all of your tax returns from the solution you're using right now into TaxWise Online, so that you can take advantage of the accessibility anytime, anywhere, the enhanced cloud-based security, because now everything is stored on the cloud. So all of the firewalls and all of the anti-theft and all the encryption capabilities are taken care of by the cloud solution. And then, of course, all of your documents, as Anthony showed, will be stored online via the TaxWise Online Vault. Now, Anthony, I do want to bring you in for the reduced office costs, because you are a practicing enroll agent, and I know that there are maintenance costs that come about when you're using a lot of hardware, namely networking, namely, all the IT requirements. With online, you really don't have to worry about that.
So yes, it will reduce office costs. And one of the reasons why it's going to reduce office costs is because you're running your tax office in with less expensive equipment it requires. So you'll see how I'm just working within browser tabs. I'm literally using the same Google Chrome that my kids use to do their schoolwork or play video games and stuff like that on. So reducing your office costs, I mean, an iPad, $200 Google Chromebook you can use. There's no need to pay an expensive IT person to come in and lay the infrastructure and run lines and Ethernet cables and things of that nature and create a server. Many tax offices are recognizing there's not much need for a server, and they're also noticing that they can store these items in the vault, those tax documents in the vault. That's exclusively available at the TaxWise Online. With that unlimited data, you have the ability to store those items directly in that area. So I wanted to make sure I just bring that to the attention of all of our guests here today.
So with that, Anthony, let's go ahead and launch our last polling question, and that is essentially a follow-up about TaxWise Online. So if you're interested in speaking to a solutions consultant about TaxWise Online, go ahead and choose option number 1. If you would prefer that we send you an email with more information instead of a phone call, go ahead and choose option number 2. If you've already renewed your current tax software, that's option number 3. If you're already using TaxWise Online, thank you very much. We appreciate you. That's option number 4. And then if you are using TaxWise Desktop right now and you're interested in TaxWise Online, choose option number 5, because we'll ask your account manager to communicate with you and to contact you to talk about the different options that you have to make this switch from desktop to online. And as I mentioned, all of your tax return data will convert to the online solution, and the solution is practically the same as you noticed today. Everything is in the right place. Now, if you're not using TaxWise currently, I encourage you to, at the very least, request a conversation or an email from a solutions consultant. That's option number 1 and 2, just to have that exploratory conversation. We have territory-based solutions consultants. So what that means is they talk to tax professionals within your state. They can share, some of the things that they're hearing on the phones from your state, from your area specifically, and they can recommend appropriate solutions that may benefit your business. So overall, it's a great conversation to have. And if you like what you saw today with the browser-based solution, if you appreciated the fact that you can access it from anywhere, anytime, all of your data is stored securely on the cloud, not only your tax return information, but also your source documents, your W-2s, your 1099s. You have the OCR recognition that will automatically scan your W-2 that you took a picture of and enter the information for you. If you appreciated all of that, definitely let us give you a call. Choose that option number 1 so that one of our solutions consultants can reach out to you. So with that, Anthony, I'll go ahead and leave the polling question up for just a couple of seconds. Do we want to go into the live Q&A and answer some of the questions that I see in the Q&A
Yeah,
before we wrap up?
absolutely. Let's definitely go ahead and do that. Let's go go into that live Q&A. Okay. Oh, look at this. Daryl's asking, have you ever considered about maximizing certain travel costs? That's something that we could definitely look into and talk about in the future. Absolutely. Caesar saying, first time user with OCR after the client scanned the W-2, the info's automatically populated. Yes, that is correct. I could actually pull it up on the screen right here. Let me pull that back up over here on the screen. So with TaxWise Online, I'll take a few moments here. All right,
Yes,
so
please.
right over here, we've got the in the vault when the clients upload the W-2, and I'll pull my vault up over there. You'll see we've got the OCR technology. So I'll click right over there, and you're looking directly at this W-2. I'm gonna go ahead and import this W-2 into the tax software. So let's click on Scan Document. When I click on Scan Document, click on Override the existing one that I have, or I click Add New One. Scan the W-2. So that $20,000 that was on the W-2, we're going to go ahead and have it import. So TaxWise literally reading those numbers. Now, these are documents that maybe a client actually took a picture with their phone. Maybe the client submitted it to you from the mobile site or used the client portal to send that document to you. But you'll see here's the $20,000 in wages. Here's the Fed withholding. Here's the Social Security Medicare wages, that exact same $20,000. If I look over there, you're seeing the numbers listed right over here. Now we're going to go ahead and click import and put those numbers directly into the tax software and close it out and say yes. And guess what? We're going to see that 20,000 listed right over here. Is that $20,000 listed right over there? So we do have the OCR technology inside of TaxWise for W-2s and 1099s. That's a fantastic question. Thank you for asking that question.
That's right, Anthony. Thank you very much once again for hosting another great session on maximizing Schedule C deductions. The website that we have on screen right now will give you access to additional recordings that we've done in the past on maximizing Schedule A deductions, I believe, 1040 tax credits for individual tax returns. We have introduction to business tax returns as well. So a lot of great content on that page. And of course, if you selected that you would like to receive an email or a phone call from one of our solutions consultants, we will be calling you within the next 24 hours or so. So looking forward to speaking with you. Any questions for myself or Anthony, you can reply to the email that you received today to actually attend this session. So that email will come to me and Anthony. We're happy to answer any questions after the fact. Thank you everybody for joining us today. And again, thank you, Anthony, for providing all of that great content.